Welcome. I'm thrilled to have you here and discussing some financial insights and strategies that can possibly help you secure your financial future. Now, here at Lions Wealth Management, our focus is to increase your probability of success in the world of investments, wealth enhancement, tax mitigation, wealth protection, the insurances, estate planning, and charitable gifting. And we have a lot to cover today, so I want to dive right in. First up, economic and stock market risks. Let's talk about the economic and stock market risks, because obviously it's crucial to stay informed about the factors that could be affecting your investments. And there are some key dates that we need to be keeping our eyes on, and one of them has already passed. That was September 1st, and that was when the student loan interest began accruing again. Now, on October 1st, student loan repayments will actually recommence. So what we're starting to see now is that many people are going to have to start repaying their student loans, and that can be affecting their income and how much money they have for other types of goods and services that are out there. Now, also on October 1st, we have a potential government shutdown. And yes, we were just here a year ago, and we are coming around the corner, and we were really looking at this earlier this summer as well, and we're right back into it. So it's another huge element that could be happening into this fall. And then let's not forget that the Child Care Center support and the funding of $24 billion is actually supposed to expire on the same day, October 1st as well. So what this means is that some of the support that these entities had is going away. Now, that could mean that people are going to have to pay more for the same level of care. And that is going to really be costly to them, even with those student loan repayments, if they have them, and some of the other elements that are going on. So we're really monitoring, obviously, all of these economic trends that are out there, and we really want to keep up on them because they have really a huge impact on the financial well-being of many people and how much they can be spending on other goods and services in our economy. So obviously with that, the consumption side of things, there's luxury consumptions as well. And what we're starting to see is a decrease of luxury consumption. So the people that are buying the luxury goods are no longer doing that. But then also what we're starting to see is that capital expenditures, which are businesses and what they're spending their money on, is starting to decline. And really now we're in a recessionary state of our economy and the goods that are being produced. So that's our economy, along with some of the other elements of the people that are having to repay debts and bills that they hadn't had to over the past. Now, the job market is really presenting some challenges as well, and non-farm payrolls are beginning to be revised lower. And this is really something that we haven't seen it this bad on the revisions lower since the basically 2008-2009 financial crisis. So consumers are experiencing an increased financial pressure, and really there's rising balances in interest rates on their credit cards, and also the delinquency rates are starting to rise. So yes, we're really starting to see this really add up. And the current economy trends, along with the luxury consumption that I was talking about, it's been negative for the past 10 months. And this is really why we're talking about the differences of all of these really hardships that are out there and the ways that we want to be trying to mitigate them so that they don't pose a risk on your overall wealth plan. So that brings us to portfolio changes. Now let's discuss some of the changes we're making in our portfolio strategies to help navigate all of these challenges. We're reiterating our focus on investing to Japan, India, and South Korea. And we're really exploring the investment opportunities that these countries have been having in their outperformance in the Asia Pacific region. Now, Japan stands out with a positive yield curve spread, and this really is actually at the heart of how they are growing their economy where other countries are not. While India and South Korea actually have the same positive yield curve, which is completely different from ours. Now we're also seeing positive signs in the region with improving in domestic demand, business conditions, and consumer confidence, all which is starkly different from what we're experiencing here in the US. So we're really actually monitoring all of this, and we're also taking a look at the US dollar, because there is a huge growth potential in the dollar that's going on right now. But really, there's also inflation beneficiaries as well, like energy and the investments that could go up with long-term bond yields. So what you're seeing, there's a lot out there that we're taking a look at and can actually potentially make money even in tough environments. Wealth management and advanced planning. Let's move on to wealth management and some of the advanced planning now. And really what we want to be discussing is that there's a lot that you can be doing with a financial stress test. Now, stress testing your wealth plan is essential because circumstances change and your solutions may no longer be optimal. Now, many individuals do piecemeal planning, and they're really addressing concerns without considering the broader financial situation. Now, this lack of coordination really can hamper your success, and stress testing allows you to assess your situation holistically. Now, this ensures your goals are being met with cost-effective, up-to-date strategies, and it confirms that you're on the right track, or really identifies if any corrections are needed. When considering a stress test, seek professionals who can clearly explain the process and look for advisors who understand the human element, as personal and emotional traits are vital in achieving wealth management results. And, of course, work with technically proficient experts who can evaluate and suggest the best solutions. And that leads us to our second opinion service. Finally, I want to remind you about our second opinion service. If you ever feel uncertain about your wealth plan, please don't hesitate to reach out. We'll start with a discovery meeting to assess your current situation, identify any gaps, and provide you with one of three outcomes. Well, the first one could be that you're on track and no changes are needed. There may be a few adjustments though, and that's something that you could implement yourself. Well, the third one could be that there are some significant gaps, and we will provide you with some ideas on ways to correct them. But we're here to help you navigate the complex world of finance, whether it's managing risk, optimizing your portfolio, or stress testing your wealth plan. We do provide that second opinion. Now, our mission is to enhance your financial well-being and increase the probability of your success. So please feel free to reach out with any questions as they come along. Take care.